Hi Zia, how are you?
Hi Tanmay. Yeah, I'm good. How are you?
Yeah, thank you for coming on to the podcast. So
Yeah.
yeah, the main theme of the main idea of the podcast is nothing but we take up a thought and we try to dissect it through a conversation. And mostly the guests who come onto the podcast are basically the ones who resonate very well with that thought. So this particular episode or this particular conversation is around how in India if you want to start a startup. Uh, or even if suppose I have an idea and I actually want to materialize it other than the tech stuff or other than the tech stuff or other than the idea of putting onto the paper, how do I actually go about it? So I have heard that there are different types of companies, right? You have LLC, LLP, something like that. So could you please shed some light on that if possible?
Okay. The information I'll be sharing will be focused on student entrepreneurs in India. So we have basically two options, either private limited companies or limited liability LLPs. So
Mm-hmm.
the core difference is you cannot raise funds in LLP, whereas you can raise external funding in private limited companies. That is the like core differentiator between two of the entities. So
Okay.
it depends on what kind of customers you're dealing, whether you'll be raising funding, what is the ticket size, whether you're dealing with international customers, whether it is B2B or B2C. So
Mm-hmm.
there will be a lot of factors which will be we have to consider before registering a private limited company or a LLP company. Taxes and compliances will be lower in LLP, but private limited company has a lot of other benefits as well. So we
Okay.
have it's
So
on this basis whether we want to go with private limited or LLP.
okay, so private limited is nothing but an LLC, right? LLC is nothing but a
No,
private.
it is an equivalent of LLC. LLC is an entity based in USA. LLC is not
Okay,
based in India. We
okay,
only have
okay,
limited life LLP, private limited, or partnership, sole partnership, or proprietorship. We don't have
okay,
an
okay,
LLC in India.
okay. So let's just to clear it out. So first thing is LLP, right? The other thing is private limited company, and the other thing is the third one is
Those are not really suitable for entrepreneurs like
okay,
small shops or very small businesses.
okay. What are those called?
Those are sole proprietorship.
Sole proprietorship. Okay, so it is
Uh,
on the owner. Sole proprietorship
owner
means
just yeah, it is only an individual person can start a sole proprietorship. Even a one person company can be started on with a single director, but we
okay,
will limit our discussion to LLPs and private limited because LLP and private limited because those two will be the major entities will be which will be suitable for most of us.
okay, good, good. So other than raising the ability to raise funds between these two entities, what are the other differences? Or
Uh,
see, LLP and private limited looks okay. It sounds good on paper, but just to have an intuition, what are they actually? What are the differences between
the reason we register a business as an entity is to protect us from liability.
them?
We don't want personal liability in businesses. So
Mm-hmm.
companies are treated as a legal entity,
Oh,
which can hold bank accounts, which can be liable for loans, and which can be liable for other shortcomings.
mm-hmm.
So when a student entrepreneur is going for LLP, the core goal is to accept international payments or mostly agencies and consultancy firms like go for an LLP. Unless you're doing a like really great startup, you should not go for a private limited. Unless you're raising external funds, you should not go for private limited because taxes will be very high. Even compliance and stuff will be more complex compared to LLP.
Okay, so you mean to say that most of the startups that get incubated or that basically sprout, they first choose an option of LLP, then eventually they go on to private limited companies. Is that right?
No, not really. No, not really. If like most of the startups are not actually startups, they are like branded businesses or consultancy firms or agencies. If the value you're providing to the end customers is based on the skill you have acquired in less than 1 year, then we can't really call it a startup.
Okay.
So most of us are like agencies or consultancy firms. We provide services in a branded way, and it is we don't really consider them as startups. So LLPs would be more suitable for such companies because most of the VCs will not fund such companies or startups, so-called startups. So we have to like we have to be really careful about choosing what entity for our business.
Okay, so you said that if you are an LLP, you cannot raise external funds. So does that
Yes.
mean you can't do Series A, Series B, or seed funding? Is that
No, no, that is only limited to private limited companies.
okay? So only the private limited companies can take seed,
Can
pre-seed.
yes,
Okay,
yes.
so LLPs cannot.
LLPs cannot. If you're starting out for the first time, if you're in first year of college or second year of college, you should go for an LLP. Afterwards, you can also register one more private limited. It's not really that complicated, or it does not really cost that much. But like just starting out, LLPs would be more suitable. Like you can accept international payments. You have a protected legal entity, which is
Mm-hmm.
not like limited liability protection. So
Okay.
mm,
Okay. Uh, so you said that we register a business because we want to be protected from liability. So could
there's
you
also a
expand
trust
more
factor,
on, yeah, could you
not
expand
just
more on what?
liability. Like not just liability, we are being mandated. If you're like if you want to be recognized as a business, it is mandatory to be registered as a company.
Mm-hmm.
It is mandated by the government. You cannot really it is mandated by the government. And also you there's a trust factor involved when you're dealing with high ticket customers. They don't really trust individuals. You have to have a private limited, like you have to have a registered entity with an office address and everything, customer
Okay.
support details. Even payment gateway providers do not provide you means to access international payments, and even national payments they'll be limited to and up to like you'll be capped without registering as a business. You won't
Okay.
get a like to get a GST registration. You need to be registered to accept payments, to get licenses, to get permissions. Everything you have to be registered. There's a trust factor involved in registering.
Okay. Okay. So to get all the licenses, or basically to start operations, you
Yeah.
need a
To
registration, right?
yes.
Okay.
Yes.
So tell me, what are the disadvantages if other than starting ops? Suppose tomorrow my startup fails, or not the startup, so-called my LLP fails. So how am I protected with that registration as an LLP?
The money you've already spent is not really protected.
Okay.
The liability protection is limited to various from business. If your company goes bankrupt, you're not personally liable for it. Like
Mm-hmm.
let's just say your LLP borrowed like 5 crores from the bank,
Okay.
and it has gone completely bankrupt. So the five
Mm-hmm.
crores loan will not be repaid by you personally. It will not be recovered
Mm-hmm.
from your personal assets, only from the
Okay.
company assets. It will be recovered. Whereas if you take a personal loan to start a business, bank will come for all your assets. Uh,
True, true. Okay,
so
so
that is one of the form of liability protection.
cool, cool. So how does this translate to private limited companies? So even there, that particular
Same.
entity borrows or on its name, right?
Yes. What I just said was is mostly applicable to private limited.
Okay.
LLPs usually well, it is the same procedure for like taking a business loan. Both the entities have a similar procedures. Like you have to have a paid up capital, and they also assess the profit and loss of your company, whether it's been operational for a few years. There are a lot of other requirements based on the bank, like and
Mm-hmm.
the amount of loan. So they don't really want the company to go bankrupt. And even if they don't pay loans, like they will accept any personal collateral for even for the companies.
Okay. Okay. So
Mm.
other than the ability to raise funds, what is the difference? What edge does a private limited have other than the ability to raise funds?
Other than the ability to raise funds, uh, compared to LLP, I
Yeah.
can't think of any right now. I can't think
Okay.
of any right now because higher compliances, higher tax, even uh, yeah, you can
Okay.
have multiple,
Okay.
a lot of directors in private limited company. Even if you're not raising external funding, even if you're bootstrap, you can have multiple directors, and you can have a
Mm-hmm.
complex management system in a private limited company where decisions are made by the directors after board
Okay.
approval. Mm.
Cool. Cool. So
It
okay.
can be
So
a mega structure.
okay. So private limited companies allow complex structures, is what you mean to say,
Yeah,
right? Okay.
classes of shares.
Okay. Good. So one more thing. So suppose I want to register an LLP tomorrow. So what will be the process?
Like it is fairly simple to get your LLC registered. You can just go to any of the websites which offer your LLP registration. It will cost less than 10,000 rupees. With other authentication fee, and other documents. If you have been already been registered as a director, it will be like way more simpler.
Mm-hmm.
You will get a
Okay.
DIN number, just like Aadhaar number. You'll get a director identification number, DIN number, and also
Okay.
you'll get
Good. Good.
digital signature certificates like crypto. It will be based on cryptography
Digitally
to
signed certificates
digitally signed certificates, DSCs,
of the director.
of the directors to sign the company
Oh.
documents.
Okay. Okay. So one that's cool actually. So these days, even the government of India gives a lot of funds to startups now through DPIIT, through the Startup India's scheme, SISFS, right? So to be eligible to take or borrow money or take money from those schemes, do you need to be registered as an LLP or do
Yeah,
you?
it is mandatory to be registered. Mandatory to be registered.
Okay, so if you are an LLP, you can take such kind of money
Grants. Yeah, you will be
grants.
eligible for grants, but you won't be eligible for money from VCs and micro VCs. Like
Oh,
from private
that
investors, you won't be eligible, but you can definitely go for grants, small grants.
so grants is the only enabler that can
Yeah,
bring in money into an LLP.
yes, yes.
Oh, cool, cool. So
Bank and also
what
loans.
loans, loans on the company on the LLP itself, right? Cool. So what are the other things when you start an LLP or when you are trying to start an LLP other than registering the entity as itself, and what are the things that surround it? Likewise, it could be
Well,
GST registration or something like that.
yeah, post getting your getting your LLP registered is like fairly a simple process. You need an
Mm-hmm.
office address and few of your mandatory documents, PAN card, Aadhaar card, and everything else. After which you have to, for the private limited companies, you have to get a current account from a bank, and you have to deposit the paid up capital.
Okay, so what is paid up cap?
There'll be like two different form of capital in private limited: paid up capital and authorized capital. And like we
Mm-hmm.
have to deposit the paid up capital. This is like or it can be any amount like 5,000, 10,000, or 1 lakh or 10 lakhs. Like paid up capital will be limited, which the money paid by the shareholders of the company
To obtain
to the
shares of that
company
company.
to obtain shares or equity of the company. Money is being paid by the directors to the current account of the bank of the company.
Okay, so that is
Okay,
called paid up
the
capital.
paid up capital
Okay,
to
so
acquire the
suppose
shares.
okay, suppose I as a single director deposit 5K into the private limited company's current account. That means for 5,000 I own 100% equity. Is that right?
Uh, uh, and no, not really. But first of all, you cannot have a single director in a private limited company. You need to
For an
have at least
example.
two directors.
Okay,
You need to have
suppose.
at least two directors,
Mhm.
and getting like deciding the equity structure at the beginning. You have to like decide the equity structure at the beginning itself. Like CS will ask you what percentage of the company will be held by which director, and
Okay.
what will be the paid up capital. Accordingly, your paid up capital will be decided by you.
Mm-hmm.
Like
But
previously, it was
you
minimum 1 lakh.
okay,
Uh,
minimum 1 lakh.
Previously, it was 1 lakh. Now there's no paid up capital limit. You can pay any
Okay.
amount and
Okay.
get
Okay.
your equity percentage.
Okay. So let's say me and my friend, both of them assume to start a private limited company, and we have decided on an equity structure of 50-50 again. And
Mhm.
both of us together we put 10K. So
Mhm.
basically each of us is putting 5K and each of us will get 50-50 of the
Yes, you get
equity,
50
right?
50% of the issued shares, currently issued shares. You can issue like you can also split the shares. You can issue new shares. You can issue new shares and give it to yourself at free of cost. You can do anything with your like. There's a face value of the share.
Mm-hmm.
So
Okay.
like we don't really have to go in depth of the shares. Like all you have to decide is what percentage of the company will be held by which director. You can go.
Mm-hmm.
You should not go 50-50. At least 51 or 49 to like
Okay.
prevent
Someone
landlock
has a veto kind
decisions.
of.
Someone has a higher percentage of equity. After registering and after getting your equity percentage, you have to like get GST registered too. GST registration is mandatory after getting your current account.
Okay. So what does GST registration enable me to do?
Like all the payment providers
Mm-hmm.
require you to have a GST certificate.
Okay. So that they can refund that
It is
80%
an
back.
identification. It is an identification number for a business. GST number, it will be an
Okay.
identification number for a business, and it will be mandatory. Like at the place of business, you have to display your GST number, and
Mm-hmm. Mm-hmm.
you have to file GST every month. Input tax credit or like outward sale, based on your class of product you're selling every month or quarterly. Taxes on
Okay. Okay.
inward and
So
tax credit on purchases.
that was too many heavy words at once. Let's break it down simply. Let's make it simpler. Okay, so you said that you need to pay GST every month or quarterly. Those are the two options that we have.
Yes,
And
yes.
do we need to pay GST irrespective of what we earn, we do not earn, there is no sales, etc.?
Irrespective of like even if you have no revenue or you haven't purchased anything in the name of your company, you have to mandatorily file GST every month or every quarterly, whatever scheme you have opted for,
Okay,
or else there will be a fine per day fine.
okay, cool. So when I'm filing GST, what do I actually file? Do suppose let's take two scenarios. First scenario is I have done zero sales this month. Probably I'm just new. I'm just starting out.
Nil GST, nil
Nil
GST,
GST. Okay, so
nil
you don't
GST.
pay
There will be an
anything,
option
just
for
you
nil
need
GST.
to.
Nothing.
Okay, okay.
Just
This is
click
scenario
on the
one.
nil GST and file.
Cool. So in scenario two, when I make some money or probably I'm generating some sales, so then what, how much is it that I pay a percentage of something on as GST or how is the structure?
All the products you have sold during that month, you'll
Hmm.
calculate it based on the product class of your product. It will be either
Okay.
18%, 5%. Based on that,
Hmm.
mostly we don't deal with this stuff. Like accountants handle it. But based
Okay.
on the class of your product, you have to pay flat 18% or 5% or 10%, even 28% based on your product. Also, the deduct amount is deducted after all the purchases you have made under your company name. Like we'll pay GST on every like all the products we purchase in the company name, right? That
Right.
GST will
Right.
be claimed as income ITC, like a credit. It will be treated as a credit, which will be deducted from the GST purchased, like GST we have to pay.
Okay. Let's explain this through an example so that it will be easier to
Okay.
understand.
And let's just say you have made sale of 1 crore rupees, of
Okay.
which you have to pay 18 lakhs of GST.
Got it.
And you have purchased a lot of equipments for your company, uh, on which you have paid GST amount of almost 10 lakh rupees. Like you have already paid to the government in the form of
Okay.
GST. When
Okay.
you purchased it on when you provide your GSTN number to the companies you have purchased, that I'm purchasing this in the name of my company,
Mm-hmm.
that 10 lakh rupees will be claimed as like credit, income tax credit, which will
Mm-hmm.
be deducted from your 18 lakh, 18 lakhs you are currently liable for.
Okay,
So
so
the
eventually I
net
have to pay out
GST you'll pay is 8 lakhs.
8
Yeah,
lakhs.
net GST you'll pay is 8 lakhs.
Okay, good. So, see, one more term that comes up, right? In Shark Tank also, we have seen profit after tax. So, whatever is left out after filing GST, is that what they are talking about? PAT, profit after tax.
No, not really. Like there are a lot of other stuff to consider as well. We also consider like depreciation on the products, whether like all the equipments we have purchased, we consider depreciation. We also have to consider
Oh,
interest on the money we have borrowed. Like EBITDA term, all
hmm.
the we use EBITDA, right? So
Yeah, yeah,
all the terms we have to subtract to like if we have realized a profit or not. We have to consider a lot of other stuff as well.
variables.
This will
Okay,
be mostly, this is not mostly held by this is done by usually done by the CFOs or the accountants, CAs.
so
So we
now,
don't
no,
have to
I just
worry about
wanted
it.
to understand the term PAT. So, the tax that they speak in PAT is that only GST?
No, no, not really. This is this is one of the first steps of the tax GST. Again, you have to pay corporate tax, which is like 22% for the private limited companies at the initial stages. Less than 1 crore rupees, you have to pay corporate tax on the profits.
On the
After
profits.
deducting on the profit, after deducting employee salary and other expenses held by your company. So that is 22% for the first 1 crore. Then again, it will like plus 12%, plus 15% something. You have to
Okay,
pay
and
that. Then after
this is exempted for LLP, this corporate
and
tax.
corporate tax is not exempted for LLP. That is like even higher for LLP, 30%.
Okay.
Flat 30%, flat 30% for LLPs, whereas lower for the private limited companies, 22%. But the private limited companies taxes will be actually be higher because when you're withdrawing money from the LLP, like all the money has been already, all the taxes for the money have been already paid for. Like you can like just use it after 30% deduction of taxes. Like it's
Okay.
directly your income. Whereas for the private limited company, again it will be treated as income.
Capital gain.
You have to pay
Sorry, whatever
capital
income tax you have to pay, you'll pay at that
based on your like above 20 lakhs,
income slab.
above 12 lakhs,
Okay.
above 25 lakhs. Based on your income slab, again you have to pay tax. So for private limited, tax three times. Uh,
Yeah, true.
Whereas for LLP, this is twice.
Two times tax, but 22%, 30%, 8% increase. But obviously, you'll only pay tax when you make profits. If you don't make
After
profits,
deductions, yeah, after a lot of deductions.
there's a lot of deductions. Cool, cool. Uh, okay, so have you seen this series? Even I forgot the name. Lol. Uh, Suits. Have you seen the series Suits? So
Like
they're
I've seen
basically
few shorts I've seen. I've not watched the
so
whole series.
okay. So there, what the company structure is that they have named partners or partners kind of thing where if you want to become a partner, you'll have to pay some X amount and then you become a partner. So is that structure similar to private? Means where does it fall? This structure.
Can you just repeat? Pay
Uh,
money and accept a shareholding.
So in that series, what happens is there is progression. So they go from levels to the final level is nothing but a named partner where the company name also has your name. So it's so in that series it was Spencer Lett or something like that. So both of them are named partners. And to become a named partner or to become a partner, you have to pay some upfront capital and then you become a partner in that company. Basically, you have the ultimate rights
That
of kind of.
that are made up rules for the company itself because in India you can only like choose two of the names. Like initially you'll be asked for two of the names for the while registration. You have to give two names, like something private limited company,
Mm-hmm.
based on which government will choose your name once. After, like you cannot change it based on the directors. Uh, you cannot change it every month on month or year on year. So private,
Okay.
name of the company is probably fixed. What you're talking about is mostly about brand of the company based on they are changing the name based on the partners, right? So partners
Yeah.
can change yearly or even monthly, or
Okay.
those are probably
Probably.
made up rules. We don't necessarily have to name the company based on the director's name or something. It is mostly based on prestige of the company, I guess.
Yeah, true. That's obvious
Hmm.
that obviously the director's names doesn't don't reflect onto the company's name. But I was just fascinated that is there a structure like that that also exists where it's kind of similar to a private limited company where you pay up capital and you have the equity divided between the directors. Uh, there they called it named partners, but they also seemed like they are the directors of the company. So basically, the directors keep on changing, and get to become a director, obviously you'll have that promotion, but also with that you'll have to pay up some capital to actually get that percentage of shares or something like that. And they were specifically called named partners because their name was on the company's name. So
Acha.
I thought probably
Interesting.
something like that
Interesting.
existed.
Not in India, probably,
Okay.
because in India, most law firms are LLPs, minor law firms, which deal with criminal and civil law. Mostly they
Mm-hmm.
are held as LLPs
And
or sole proprietorship. Whereas companies that deal with corporate law, those are registered as private limited companies.
okay, okay,
Most of the civil and criminal lawyers I have dealt with are like sole proprietorship. They don't issue invoices or anything.
okay. So sole proprietorship doesn't need to submit or give out invoices with
No,
that
no, no,
GST number.
no, not really, not really.
So then how do they bill?
Uh, I don't know.
Directly just ask.
Like even most of the clinics we have dealt with, like doctors also, like they pay a limit, like a percentage of tax based on their yearly income, I guess, yearly or monthly incomes. There's a separate ITR form for professionals like law professionals and clinicians, right? They
Oh, is
they
it?
pay taxes yearly. They pay individual taxes, but there are like other specific rules for them. ITR 4 or something, I guess. I don't exactly remember it.
Okay, cool, cool.
Mm.
So since we are talking about startups, right? So could you name out few grants that were actually that are actually useful or that are
Uh,
mostly useful for startups in deep tech probably?
Start for deep tech. The thing is, in India, like most of the grants, they say they are for like pre-MVP stages, but they are not really
Hmm.
for pre-MVP stages. You have to reach TRL level 6 or 7 on your own. Then only you will
Which
be
level?
eligible for
Which level?
grants. TRL level 6 or 7.
Oh, what is the
Technology
TRA level?
readiness level. It is technology readiness level. Like
Technology
uh,
readiness level. So is there
technology
a
for deep tech
framework
startup.
with what they
There's
give
a
this?
framework. There's a framework. You have to achieve TRL level 6. Like mostly 4 or 5 also it is you're eligible for most of the grants, but you have to achieve like up to 6 on your own. Then only
Okay.
you'll be eligible for most of the grants.
So is this the framework for TRA? Is it centralized or each incubator has its
No,
own TA?
TRL level, each incubator has its own. Mostly generalized terms.
Okay, so what is
TRL
a
level
TRA
is mostly
six?
general.
If
TRL
in
level, like TRL, TRL level are mostly defined by incubators themselves. Like, do you have a working prototype? Do you have it tested in a lab? Or have you actually tested the technology in real world? Is your technology validated? Is it just
no, I
in the
what I meant
ideation
to
phase?
ask is you said that
Mm.
TRA six is most of the incubators TRA six is what is required to get
No, no,
any
no,
kind of
no, no,
grant.
not in not in most not in most incubators. Depends from incubator to incubator. Depends from grant to grant. Depends from like
Okay.
a lot of other reasons are like mostly like, based on my experience.
TRA 6 is
TRL
the
level,
safe bet.
no, TRL level is 4 is the minimum criteria you have to meet. Afterwards, it depends on the incubator.
Oh, okay. TRA 4 is the minimum. TRA 6 could be said as a safe bet to
TRL,
have.
it is
TRL.
TRL,
Hmm.
TRL. Uh, Good to achieve 4 or 5
4 or 5.
on
So
your
what,
own.
suppose my product or my MVP is TRL 4. So what would it be actually? So what defines TRL 4 or 5?
Uh, TRL level, like you have uh, built your MVP product
Mm-hmm.
and you have also tested it in controlled environment.
Okay.
You have tested your product in controlled environment and it have worked perfectly. Now you
Mm-hmm.
have also tested on a very small sample in real world.
Okay.
So that will be like around TRL 5 or 6 something. Also.
Oh, oh. So this will be mostly for medtech kind of startups,
Uh,
because for other
Not really.
startups achieving this would be really easy, right? Achieving TRL 5.
Uh,
Suppose, for example,
if
you
you're
have
just talking
a.
about like software as a service, TRL is not really applicable to those kind of products. TRL is
Okay,
applicable for deep tech products, not simple
only deep
software
tech.
as a service products or vertical software. Verticals as and like horizontals as both are like TRL is not at all applicable to that.
Only for
TRL is
deep
only
tech.
applicable to deep tech products which require like to be system proven in operational environment. Efficacy is like measured.
Cool. So what is the maximum TRL?
I guess it is 9 or something.
Okay.
Uh,
So do startups or do companies achieve that at a pretty
yeah, they
nascent
do
stage?
achieve a lot. Yeah, yeah. Not in less than 1 year, obviously, but they do
Okay.
achieve in TRL level 9. And also after achieving your TRL level, you have to also go for regulatory approvals to actually use your software or technology product in real world.